today's video, we're going to talk about how can you recover your losses that your current portfolio is suffering. Okay, especially for those people who have just joined the stock market, like during the last year, 2019, you could have bought stocks at a really high price, and the portfolio should be looking at 40–50% loss. Okay, so I'm going to share with you one method on how can you recover your losses when the market rebound. Okay, now take a look at this Excel table over here that I've compiled some of the position, okay, a mock-up that we can discuss. Now, if a trader, particular trader or investor has 5 stocks like this: Keramine, Revenue, Franklin, K-Power, and Air Asia, right? So your total amount invested, okay, I have done up the numbers right here. So this is the capital invested in Keramine at the high price of 120. Now it's doing only 43 cents. Okay, so based on 120 entry price, your quantity size will be 16,600. Okay, and based on the last done 43 cents, your portfolio is now from 19,900, you are left with only 7,100. Okay, same for Revenue, Franklin, and K-Power, Air Asia. As you go down the list, this is how I got the numbers over here. So the total amount invested in these 5 stocks over here, you have got 99,600 ringgit, very close to 100,000, and your portfolio is down to only 55,300 ringgit. Okay, suffering a near, I think, 40% loss. So what can you do in this situation? Okay, instead of just hanging on to the portfolio and not doing anything at all, okay, you can consider to do some portfolio adjustment. Okay, now the risk here is those 5 stocks that you are holding today, it may not be these 5 stocks. I'm just using these 5 stocks as an example. So you could have hold other kind of penny shares that would be even worse. Okay, penny share will be even worse. Some company that might be already in trouble, okay, financially, with high debt and you know, with a credit crunch coming up. So they they may not be around, or they may not continue to go up as the market recovers. So the quality of company that you're holding in your portfolio is very important. Let me show you this stock called K&M. Okay, K&M, let's zoom out, go back to the last crisis time, 2008, 2009. There you go. Okay, there you go. Okay, so this is the 2008, 2009 rally over here. So during the 2008 financial crisis, K&M plunged, okay, totally erased the gains that it took 2 years to build up, okay, over 1 month, over 2 months. Okay, pop, all the way come down from 8 ringgit to about 150 ringgit, and it never recovered. Okay, you can see that it never recovered, and currently is penny share status. Okay, never really recovered. So there is a danger of any one of your stock may happen to it. Okay, so in this example, I'm just using 5 stocks that I'm very familiar with to discuss this maths model with you. So hopefully can help you make some decision in terms of portfolio adjustment. So you take a look at this is what is happening now, and this is what you are left with, 55,000. So how do you recover your losses without, okay, in the next rebound, okay, without investing more money? Okay, without investing more money. But of course, if you want to invest more money to dollar average, okay, that is another strategy by itself. Okay, so let's focus on this first. Perhaps that strategy will be for another day. I'll record a separate video for that. Now, from this 55,000, you can, okay, you can see I have done this. Keramine, maybe Keramine, I will sell it. So Keramine, when I sell it, I will rechannel it into a stock Revenue. Okay, now this rebalancing, that means you buying another stock. It may not be Revenue, it may not be Franklin. This is just for example. I say again, this is just for example. So Revenue, the whole idea is you need to put your money in those stuck stocks that you can sell away, recover your capital, and invest in the next potential company for the next market rebound or the next bull market. Okay, instead of staying put in the current stock that you're stuck in, because they may not be going up, okay, in the next 1 year, 2 years, or 3 years. So let's take example, you put it back into Revenue. That means you have got 2 Revenue positions. The first one was the one you caught at a high at 1.12. Okay, your 19,000 is still there, and then you reinvest the money that you sold Cheramine into revenue. So you buy more revenue at 81 cents. Okay, 81 cents. So you can buy with 7,000 ringgit, you can buy about 8,800 units of it. Okay, so the next amount is you decided to square off K Power and Air Asia. Okay, these two stocks, you decided to square off these two positions. So you can raise a total of 8,000, sorry, 18,000. Oops, what is this? 18,700. Okay, you're able to raise 18,700. So this is where you put the money in. Franken, okay, so you think that Franken going forward is still going to be good business? The semiconductor is looking great with the pent-up demand during this shutdown period. When it recover, give it 2 quarters, the share price will skyrocket. If that is your opinion, you put it into Franken, okay, and then based on the entry price of 140, okay, you are able to buy 13,300 units based on 18.6K. Okay, now let's say we give it 1 year, 2 years when the stock market recover. Okay, revenue last done 130, so you make a 23,000. So your portfolio of 19,900 capital invested now grow to 23,000, and then the most recent entry of revenue, which you got 8,800 units, also 130. So you have got 11,440. Okay, same for Franken. Okay, these are the two new positions where you square off those stocks that you don't want and you reinvest in these two potential stocks. Okay, let me repeat again. It may not be revenue, it may not be Franken going forward. I'm just using them as an example. Okay, so Franken from 140 grew to 240. So these are the last done price, maybe 1 year or 2 years down the road. Okay, during the market rebound or the bull market that comes back after the coronavirus is done for. And then this is the total portfolio value. Okay, from a capital of 65,548, it grew to 91,460. Okay, now you're still down by about 8,000 ringgit. Now this is much better than if you sit still and don't do anything. Okay, so if you got any discussion, any comments or any question with regards to how can you do this, you know, we can leave it in the comment field and we can have a discussion, right? So with that, this is the end of this video. Hope to see you at the next one. Look out for our video. We're going to come out with more and more videos to help each other to tie through this very difficult period in the stock market. Okay, see you.